All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. Will be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today on this beautiful Wednesday. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. And as always, we want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, centering yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade successful materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So let's uh let's get down to business. If everybody can hear me okay, drop me one in the chat and we will get things moving. Perfect. Appreciate it. All right. Um, Trading economics. We have some risk on sentiment creeping into the market. Um, so European shares rise, DAX hits fresh record highs. Um, European stocks climbed on Wednesday, buoyed by fresh fiscal stimulus measures and progress in EU-US trade talks. Uh, Germany's DAX index surged to a new record high after government approved a $46 billion tax relief package for 2025 to 2029, aimed at supporting businesses and reviving economic growth. Excuse me. Meanwhile, EU Trade Commissioner Marcos described talks with U.S. Trade Representative Jamieson Greer in Paris as productive and constructive, noting that discussions were moving in the right direction. Marcos took this as a sign that the EU could secure an exemption from President Trump's recent decision to double tariffs on steel and aluminum imports to 50%. That's something we didn't touch on yesterday, but we'll talk about that a little bit. Um, in corporate news, shares of Airbus soared by 4%, followed by reports that Chinese airlines are considering order up to 300 aircrafts, with potential deal expected as early next month during a planned visit to by European leaders to Beijing. All right, so that's where we are on the euro side of things. Some progress there. Steel prices, steel rebar. Steel rebar climbed back toward 3,000 per ton on Wednesday, recovering from multi-month lows hit early in the week. The rebound came after U.S. President Donald Trump signed an executive order doubling tariffs on steel imports by 50%. Um, a move aimed at protecting domestic producers and supporting American steel jobs. The tariff hike is expected to lift U.S. steel prices while increasing pressure on global markets, particularly China, which faced the brunt of the trade measure. Um, um, one second. Um, mm, 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 mm. Meanwhile, steel prices fell sharply early this week amid growing fears that is of softer demand. Private Cakeson survey revealed that China's manufacturing activity unexpectedly contracted in May, reaching its lowest level in over 2 years. The index, which reflects smaller export-focused firms, indicated that uncertainty around U.S. trade policy continues to weigh on business confidence despite a 90-day pause in the tariff enforcement. Um, um, so trade uncertainty still a concern. However, these tariffs um, are causing some additional changes in the market, right? So that 50% tariff on steel, right, majorly impacts China. China is responsible for producing approximately 52 to 55% of the world's steel output, right? So it's the largest steel producer globally. Okay. So major impact there. Um, so that's why this is important, right? With Donald Trump, basically doing everything against China. This is a roundabout way to continue to increase those tariffs on China from a different angle. Um, so keep that note there. Um, ba, 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 ba. We'll say there. Um, then we got Australia GDP. Economy grew up 0.2% quarter on quarter. 2025 slowing sharply from a 0.6% rise in Q4 and falling short of the expectation of 0.4% increase. Uh, it marked the fourth straight quarter of expansion, but the weakest in 3 quarters. Public spending posed the biggest drag since Q3 of 2017. Severe weather severe weather disrupted mining, tourism, and shopping. Notably, public investment declined for the first time in 3 quarters, reflecting the completion of major projects and some delays in new ones. On the household side, household spending eased with growth focused on essential foods like food, rent, electricity. Government expenditure was flat after 9 quarters of gains. All right. So overall, economy slowed down a bit. All right. So that's where we are in Australia. Continue to kind of that narrative of a weaker Australian um, economy, right? We could see that weigh on the Australian dollar at some point. Okay. Um, let's go over to the calendar. We have a lot of consolidation in the market right now. Um, Today we have here are those European PMI numbers, right? Most of those pretty positive. But all eyes are really looking at jobs data coming on Friday. Precursor to that, we got ADP non-farm employment change coming out today. And then you got central bank speaker Bostic and Cook speaking this morning. We also have Bank of Canada rate statement today at 9:45. Then we have ISM Services PMI. This is another area that the market participants are watching to give more insight on where the Fed could land, um, depending on the cost of things, right? Purchase Managers Index. So eyes on these two things today from a Federal Reserve perspective, and then we got Bank of Canada rate statement as well. Okay. Um, So that's where we are from a fundamental perspective. Um, any questions, thoughts, anything additional to bring to the table? No? All right. So let's hop over to the charts. Come back to this pound New Zealand. DXY slowly inching down, trying to inch down, right? We talked about it yesterday. It's a slow move. Um, Not a ton happened in the market yesterday. You did have some positivity coming out of some of the tech stocks, but overall, excuse me, overall, the dollar is still moving down. All right, so we'll see what happens. It's a slow move right now just because things are so uncertain across the globe. Okay. Um, we come here to the dollar CAD. All right, we got Canadian dollar rate statement today. On the daily time frame, we've pushed down to this 118 level, right? Shallow retracement, push down to the 118 level. We got a stochastic that's playing around in this buy zone. Um, so I want to watch this here, see what happens with that rate statement. If let's see, we're expected to cut. No, forecast is to hold steady. All right, previous forecast. So hold rate. So we'll see what happens in the press conference. Um, but we'll see what this causes. Okay. There's a couple different views here. So right here we have excuse me, we have this daily support down here, right? At what's this? At 134, right? Just inside the D extension. Okay. So I want us to keep this area in mind, right? Keep this area in mind for the daily D extension down here. Okay. So as we come down to the four, excuse me. As we come down to the four, things get a little tricky. Okay. Depending on how the data comes out today, if we get a initial boost in the Canadian dollar, we could see price run down. We have this stochastic on the 4 hour coming out of that sell zone, right? And you saw on the daily, the stochastic was kind of in the middle. So we could be in for potentially another leg to the downside because we do still have dollar weakness, right? So if we have dollar weakness and a slight bit of strength for the Canadian dollar in holding the rate where it is, we could see this push to the downside, putting us in this 118, 127 zone on the 4 hour, right? So we got this daily D extension here at 133. And the question will be, will this daily support hold and price not get to the D extension on the daily, right? So if we get that push down, staying inside that D extension, not reaching it on the daily, then we get this 80-20 on the four, right? We'll have our both of our stochastics back into that buy zone. Okay. And that'll give us some additional confluence that hey, we might be able to get this move back to the upside. Okay. So just different thought that I want us to keep in the back of our mind so that we're really sitting and waiting on our confirmations and we're being patient in the moves. Okay. Whoops. Boom, boom. Okay. Um, it'll probably primarily be that middle one there, but we'll run an inner trend line there. All right. So just being patient here because we could see this continue to trickle down into this zone. All right. So just be aware of that. So as we come down to the one and look at this a little more closely, on the 1 hour, we came just shy of a 50% retracement here. All right. And that 1 hour D extension falls inside of that zone where we have that 118, 127 zone on the four, right? And just inside the D extension on the daily, right? So this this and that 4 hour kind of points to looking at some potential more downside action before we get that reversal. So stick to your trading plan, whatever that is. If you trade in the zone, that's beautiful. If you trade off this daily time frame, right, place your stop outside that D extension, just as we do with these, right, and allow it to do its thing and turn over. Um, but just a couple additional pieces there that I want us to keep our eyes on as price continues to move on this dollar CAD. Okay. Any questions on this one? No? All right, cool deal. Benny, good morning, bro.
Ryan, good morning, sir. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself?
I'm doing pretty good.
Awesome. Awesome. You got anything on your mind this morning, bro, from a fundamental perspective?
Just I was reading this morning, right? It's like saying that the stocks and futures are rising, starting to rise a bit.
Yeah.
Especially on that tech side with Nvidia. And one of the articles I was reading is it said that it seems like a lot of investors and market participants have turned the corner on tariffs as they're gaining more clarity that he's looking to strictly use it as a negotiating tool. You know,
Mm,
yeah, like, but it's crazy because it's like I'm reading this in the face that I woke up this morning and see double tariffs on steel and aluminum.
right. Yep. Going to affect today.
Yeah, so it's like but I guess they're like we've had enough of it. He's only using it as a negotiating tool. Like he's full of it. He's gonna come off of it. Like court's gonna get him. So we're gonna keep it moving.
Interesting.
Yeah, yeah. I was reading that
Interesting.
on CNBC this morning, looking at futures and things like that. But they're saying that's what it seems like they're turning the corner on it. Like it is what it is. Enough's enough. Trade on. Like whatever he does with these shares is just gonna be temporary because he's gonna change his mind on it. So yeah, I mean, but the markets are definitely you know starting to rally. I mean, looking at the S&P and all that stuff, you see it's moving back.
Yeah.
In the right direction. Which I mean, what do we call at the beginning of the year, right? Right, look to make the money in the
Hmm.
second half of the year.
Yep, it
So
did.
you know, so that's all. Just paying attention to the back and forth on that. But I'm always trying to, if I can ever read an article and try to get a better insight on what market participants are thinking regarding a lot of the stuff that's going on. And it's like that's what I kind of try to look for. Like, what are they, you know, really thinking over the long term? As all of this stuff keeps going back and forth. And I found that quite interesting this morning.
Yeah, and you know that I saw a headline yesterday from what's the guy? The last name is Lee.
Yeah,
Um, basically saying he's looking for a melt up in the market.
yeah,
Um, and it kind of insinuated some of what you just said.
Yeah. So yeah, it's interesting to see it. I seen also that just thinking about different stocks and things like that. Goldman Sachs upgraded its uh like some of it's like when it comes to like fast food companies and things like that, like upgrade its stances on some of its fast food stock because of the international footprint. So things are
Interesting.
yeah. So it's you know just just a few things just to think about for the future. As we continue to follow the situation with the tax bill and everything like that, just
Yeah,
what the plays are gonna be. So just looking at it from a global perspective. That's it. That's it, man.
I dig it. I dig it. Good insight, bro. We appreciate you as always.
Yeah, no
Um,
doubt.
we'll, we'll keep our eyes on how the participation shifts.
Yeah, and
That's
and
interesting.
and indeed, yeah, I did. I found that fascinating. Like, man, we getting hit with double tears, but with the market participants just like, oh, okay, we got a beat on this guy now. We just go keep it moving.
Yeah,
You know,
interesting.
yeah. So, yep, that's it, man.
Cool deal, man. Joy, what's happening?
So yesterday I was reading, and a lot of people was trying to figure out whether or not if these tariffs is taking effect. And I seen something where, we talked about, China diverting a lot of their exports, they're going else places. And it's been said that China has been showing resilience because now like they're starting to get their beef from Australia instead of where they got it from in Texas. Do you do y'all think that with this diversion that China could see more growth with them doing this because the tariffs is not going to hurt them because now they don't have to put spend get involved with the U.S.
Well, I think what you're seeing is part of a larger play even outside of the tariff conversation. And it's not even just China. You're seeing a lot of countries start to shift their imports and exports to other countries overall, in part because of the state of the dollar, but also just the continued lack of confidence in the dollar, right? So they're starting to shift those imports elsewhere, because it gives them ultimately a better financial deal, from a currency exchange perspective. Um, and so you're seeing a lot of transactions happen in other currencies outside of dollars, across the board. Um, and you're starting to see that pick up more as the dollar continues to, and it's kind of what's the word I'm looking for? They kind of go hand in hand a bit, as those transactions happen outside of the dollar. That in itself weakens the dollar because there's less dollars being exchanged, right? So, but I think that's part of a larger play, and you're seeing that across the board. There's more of those transactions happening outside of U.S. dollars and outside of the United States. Ben, what are your thoughts on that?
I think that other countries are saying that the American people voted this idiot in the office again, and that the United States is not a trustworthy partner, and we got to figure out other places where we can do business.
Bingo.
Like we cannot keep going through this, right? Our people are going to suffer as a result, and it's like we've got to move outside and around the United States because the whole idea of isolationism in the global economy, I think, is the wrong move by the United States. And people, aren't bending to the will of the United States like he thought they would.
Yeah.
So it's like, well, let me go let me go over here and get this beef, let me go over here and get this grain because we can't continue to have the puppet strings pulled. So they're actually cutting the puppet strings. Like forget it. We're tired of it. And that like I was reading I was reading also this word. What did he say? Trump says China Xi is extremely hard to make a deal with. I bet you only if you're in an abusive relationship, you only can take so much. You only can take so much.
And you slap another tariff on steel, which
Correct, correct. So it's just like, nah, man. Like you get to the point where you overplay your hand. You over. We've talked about that too. How many times we talked about that for at least a year? How many times have we said like, it's gonna overplay his hand at some point?
yep,
You
yep,
know, which is why you see the different, the Richard Wolffs and people, economists saying, you're possibly looking at a decline of an empire. This is typically what happens. The Ray
sure,
Dalios of the world,
yep,
because what happens when the empires decline, they lash out, and that's what we're seeing. And the world is shrugging its shoulders. Like, look at everything that's developing in Africa. Look at what China is doing. Look at, just think global. And it's like, it's almost like a perfect storm where, it's like, okay, well, they're no longer, want to be the shining light for the world. They want to isolate themselves. Well, we there's opportunities in that, and that's what we see that's happening. Like people, hey, I got to move on. My country has to move on. So I think that's where we are.
I don't disagree, bro. I don't at all. I do not at all. That makes sense, Joy.
Nope, it makes perfect sense.
So, yeah. So again, if you guys have not watched um Ray Dalio's videos, um definitely definitely go check them out. He also actually has a new book coming out called How Countries Go Broke, and he breaks this down also in that book. Um, but definitely take a look at Changing World Order and his videos on how countries go broke, and you'll start to get a better view of and a better understanding of these larger cycles that occur and where we are in those larger cycles, right? Because this is the first time this has occurred. It's happened consistently over a certain range of years. So definitely, definitely do that research and take a look at that because it'll help give you a different view of the markets overall as you're going into some of these things, and it'll help you from putting that investor hat on. It'll help you look at things from a broader perspective and really be able to take a step back and as you're putting together your own portfolios, see things more broadly and be able to make decisions potentially a slight differently, right? So that's where we are there. Um, yeah, so that's that. That's the dollar CAD. Um, I'll quickly review some of these Canadian dollar pairs. We have that rate statement at 8.15, right? This New Zealand CAD, 618 retracement on the daily, and we've legit just been moving sideways, right? Just been moving sideways. So we need to break out in one direction or the other. That stochastic trying to creep up into that sell zone. right? But moving sideways there. So we'll see what happens with the rate statement and the press conference that follows. We come down to the 4 and I got to run a new one. I think it'll come from the bottom. Oh, there we go. So we had a 618 retracement on the daily. We got an 86 retracement on the 4, right? So we'll see which direction we bounce from, uh, especially if the Bank of Canada does hold their rates. We'll see what the conversation is after the fact. Okay. Um, so that's on the 4, deep retracement there. And on your 1, just want to make sure. Yeah. All right. On your 1, we'll run this fib off the bottom. And that's where we are, right? We haven't gotten to this 382. We're just sliding straight across our screen, in and out of that 118 and 127 zone. So we got an 80-20 there on the 1 hour time frame. Okay. And we'll see if we're able to make a move in a different direction at some point, right? But straight consolidation. So that's the New Zealand CAD. We'll come over here to the Aussie CAD. And we have a similar story, right? Deep retracement on the daily. Started to move out of that zone, but you see the past few days, we've just been moving sideways. We got a stochastic coming out of that buy zone, right? Overall, we're looking at potentially a weaker Australian dollar, right? GDP numbers came in below expectation. Um, do we see this continue to make those lower highs and lower lows to continue that move to the downside as we sit in that play short? But been sitting sideways. We come here to the 4 and we had our 80-20 here, shallow retracement, pushed into that 118, 127 zone, broke our trend line, slowly making its way, but it's making its way to the downside, right? So depending on how things go today, do we see an escalation of this and a continued drop, or do we see a pushback to the upside before we continue down? Okay, so that one is on the move on the 4. Um, so we'll just continue to track those waves on our lower time frames as we get down here to the 1, right? That's your fib off the low, deep retracement there. And so the question is, do we take out this A at some point? Okay. Um, but we're looking at this move overall to be down. Oops. So we'll run this fib off the high. And that one off the high. Boom. Right? So that's where we are in those moves to the downside. Got a 50% retracement. Let's see how things develop here in this overall range for the past couple days. Okay, so that's where we are on the Aussie CAD ahead of that rate statement out of Canada. Questions here? Anybody still sitting in this short?
Yep.
Great work. Great work. Patience pays. Patience pays. All right, so that's your Aussie CAD. CAD Swiss. Not a ton doing, right? Not a ton doing. You got more of a risk on sentiment in the market. Canadian dollar hasn't been the strongest, so we're sitting here bouncing back and forth here with the Swissy. So not a ton happening on this one. Ultimately, we are looking for a continued move to the downside at some point, right? So we come here to the 4. We got a 50% retracement on this. Couldn't really break out to the downside and get to the D extension. And now you see, right? So we need a breakout of that zone at some point. Okay. So that's what we're waiting on there on the CAD Swiss. On the 1, if you want to run a smaller fib off the most recent lows, you can do so. Boom. And there you go. right? So we'll see what happens here. Maybe we get a push into that 118 and 127 zone, giving us that 80-20 here. But we'll be patient, we'll watch, and we'll see what happens on the one. Okay, there's your larger consolidation there. All right. So that's the CAD Swiss. CAD Yen. Similar story here, right? Moving sideways overall, top of the range, bottom of the range, top of the range. Excuse me. So waiting to see what happens here. You have the Bank of Japan. Governor Ueda said that they're not opposed to continue increasing rates. However, they're going to be slow, deliberate moves to ensure that they don't throw anything off with the continued uncertainty from a uh, global perspective when it comes to tariffs and the uncertainty there. Um, so we'll continue to monitor this here. We haven't been able to break above this trend line, right? It was here. We moved sideways through it. We got a stochastic in the sell zone at the moment. Okay. So as we come down to the 4, deep retracement, right? And we're trying to figure it out. Stochastic in the sell zone here as well. So I would not be surprised that with some of the weaker currencies, we start to see, especially with what Benny just said regarding market participants kind of shrugging off the tariff situation. Um, I wouldn't be surprised if we start to see some uptick in the yen, right? And some strength in the yen start to build. Um, Japan hasn't necessarily been on the negotiating table yet, but as things start to clear up a little bit, we could see that yen start to pick up some strength and start to make that move to the downside. Um, where are you at, Reese? On the cup and handle. I'm talking about right here. Um, Generally see it with an equal top. I would say no. Benny and Joy, you guys can definitely disagree if you think so.
Nah, it's not equal because even the one that's just below 105 is a little
Yeah,
higher.
a little
Right.
higher. Yeah,
It's like it's literally a double top or a double bottom for the reverse.
yeah. So normally you see, oops, you'll what's happening here? You'll see it up higher like that, and then that move down, right? Or if it was going to be even with this one, we would have stopped right there. And we've been even across here, and then that move down. Yep, no doubt. All right. So let's watch this here, right? Could potentially, I know we're pushing back up to the top there. If we don't get a lot of Canadian dollar strength here, um, could potentially have crown pattern. No? There we go. All right. So depending on what happens here, we got a double bottom here, right, which signals push back to the upside. But if we don't take out this right tip, excuse me, and we get price to turn over, and we could see that transpire. All right, so from a harmonic pattern perspective, that's one that we could potentially see. But overall, we're just range bound, right? So looking for some direction there as we come down to the one. See that crown pattern a little bit more defined there, right? We got a deep retracement here, so we're just range bound trying to figure it out. Not able to break out in one direction or the other. Okay. If we come down to the lower time frame, 30-minute, you can run a fib off the low here. Boom. And you do have an 80-20 here on the 30. Okay. So we'll watch that release at 8:15, 8:30. See if we get a catalyst to move that back down to the downside. Okay, so there's your 80-20 on the 30 on the CAD yen. Questions here?
Nope.
No, sir.
Cool deal. EuroCAD, nothing. Nothing. Again, just moving sideways. All right. Not a ton to take from this at all. We do have the Eurozone, right? Inflation below their target. Potential more cuts coming. They had stimulus in Germany, right? So some things happening from a fundamental perspective that we could continue to see strengthen that euro. But right now it's just a ton of back and forth. The tariff pieces kind of held this up a little bit, I believe. So we could start to see this work itself out. And if we're able to hold this 156 level, right, we'll start to see that rise again against this Canadian dollar to the upside. Okay. So if we come down, I don't know if it's popping in there. Thought I had one. Ba, 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 ba. Took it out. I'll run it off this low here. That consolidation just took those fibs out back and forth there. Okay, so from a fib perspective, not a ton doing. Yeah, there we go. Right, so it's bouncing back and forth. We have a 786 retracement here. Okay, and then it's just sideways. So do we get a catalyst to push this back to the upside and continue this move long? At some point, I think we'll get it, be it today or in the future. But just continue to be patient on this one, as we do have higher projections on this one moving to the upside. Matching the extension is here at 160. All right, so we'll track that there over the long term. But that's where we are there on the 4. Come down to the 1. And that consolidation just whipsaws you back and forth. So not a ton happening there. Okay. You got your almost a double bottom there, trying to figure it out. Okay. So this one will track off of the 4. You got an 8-6 retracement here with that double bottom. That matching extension 157, right? Cleaner look off of the 4 here with that deep retracement, looking for that C to D move. Okay, so be patient, allow it to do whatever it's going to do, and then once we get a breakout in one direction or the other, that'll then tell us where we need to go. All right, that's the Euro CAD and the pound CAD. trying to figure it out. It had a nice push to the downside last week. And now we're trying to figure it out. We've been in this larger kind of back and forth battle here. Um, but we do have an 80-20 overall here on the daily, right? Shallow retracement, 118 and 127 zone. Didn't break out to get to the D extension. So boom. Okay. So looking to see if we get a move to the downside. Don't necessarily have a weak pound, so this one will be interesting to see. We'll leave it up to the data to decide. Okay. But 80-20 on the daily there. Down on the 4, you did get a 50% retracement. Okay, so we got a back and forth happening from a higher time frame perspective, right? Which makes sense because we're back and forth, right? So this one we'll continue to watch. My projection on this one are to the long side, but do we get a retracement before that? So that's what I'm looking to see there on this pound CAD. Down on your 1, that's your active fib on the 1, 50% retracement. So do we see this continue down in the short term and then give us a reversal and move back to the upside, getting to that matching D extension on the daily? Okay, so not a ton for me on this one. I'm waiting to see what direction we break out on that. Questions on the pound CAD? No. Cool deal. So those are our Canadian dollar pairs. I'm going to come back to this pound NZD. So we've been kind of back and forth here, right? Caught in this range. But what I see developing here, we got a stochastic that's down in that buy zone. So we could see a lift, and this will be a welcome lift if we get it. But we could be developing a crown pattern here, especially if we move back into a risk on environment, right? If we move back into a risk on environment, we could see this deeper push on the daily time frame. Okay. Which, giving us a low price to then get back long, would also be welcome, right? Because we need those retracements to give us our extension levels. So that would be a welcome view as well. So if you're still holding this, just be cautious that if we break down here, break below this 221 level, we could be headed down to this 50%, 618% retracement levels down around the 21 range. Okay, 213. So that's on the daily. And we know that, we just missed um okay. Um, we just missed the extension level. I'm sorry, the retracement level here, right? Just came short of that 382 on that push to the upside, right? So we've also on the 4 hour broke the cloud, the stochastic in the sell zone. Okay, so there's more confluence that we could be looking at this crown pattern and this deeper retracement coming on this pound New Zealand. Okay. So that's on the daily. Joyce said it's hanging off the 50 with the 2.1 level is the 200, right? So those movement averages kind of in line with a potentially deeper retracement there. Okay. So we'll watch this, right? We got a beautiful move to the upside. Now, do we get a push to the D extension and then potentially further down to these support levels? Okay, so let's watch that there. And we come down to the 1. And I'm going to remove this. Let's check these out. Nothing there. We took out the A. We took out the A's again. So on the 1 hour, right, do we stay inside the AB boundary is the question. Okay, that's your fib coming to the upside on the 1. So with the back and forth happening, right, we got the fibs taken out in both directions. So that's why I started running to the upside to see if we had already taken that out. So we'll watch and see there what transpires on this pound New Zealand. If we do get a risk on environment, right, we could see this run off to the downside. Now we do have a weaker Aussie dollar. But if we see some developments out of China, right, we could see that New Zealand dollar pick up a little bit of strength. Okay. So that's where we are on this pound NZD, right? Potentially a deeper move is ultimately what I'm watching for, and that'll give us a deeper retracement on the daily. Okay. Questions on the pound New Zealand? No. All right. Cool deal. Um, just a quick update on this Google stock. Did move down yesterday, right? So our thoughts of an 80-20 here are out. We got to this 382. Okay, so now it's a question of what occurs. Do we continue to move to the downside here? Okay. Um, Overall, this is kind of where we stand. Um, and that thought of that potential crown pattern. Let's see if this qualifies as a shallow crown, because it could. So shallow crown, right? That shallow retracement here off of this fib off of that last leg, right? And technically it still is a 50% retracement off of that harmonic fib there. Okay, so technically it still is a deeper retracement for us, but we could be in for this move already starting. So let's keep our eyes on this Google stock, and we could get a nice discounted price here. Um, and that report said 25% drop, right? So we could end up heading down to around that 102, $100 range on Google. Okay. If the judges rule that a divestiture must of Google Chrome must take place. Okay. So this could be the start of that move to the downside. Could be. So we'll keep our eyes peeled on this. All right. On the 4, not much of a different perspective here. Okay. That's that fib running to the upside, starting to turn over. Okay. We do have a swing high there on the 4. And on the daily, right? This is a second swing high here. So just a little bit of additional confirmation of that. Boom. Right. So we'll see how the market opens today. Tech stocks did pretty well yesterday. Some investors on in Google, saying they're not as concerned because of the investments. They're good from a financial perspective. Google is. Um, so you have a split in market participants on this one. Google is good financially, and their investments are in AI. They're making progress in the recent releases of Gemini. They have some other pretty cool tools that they're working to launch when it comes to agents and working in that agent space. Um, they're in a good space financially. It could be a big hit, but um, so we'll watch this and see how it goes, right? The other side is basically saying the ones that think this 25% hit could occur, that Google Chrome is a large piece of Google's search revenue, and it's a large piece of the Google ecosystem overall, right? So, on the other side, those are some of the concerns there. So we'll keep an eye on Google as well. That's all I've got for today, folks. Benny, anything before we wrap it up? Might have to step away. Any questions from the team before we wrap it up? Not googly enough.
Nope, thank you.
Ain't no problem at all. All right, good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-nerve session with my awesome partner, Mr. Benny Allen. You guys have a phenomenal Wednesday.